If you missed it live, catch the podcast on kaya959.co.za.
Right, when we talk about money, we also talk about taxes. Where does this revenue come from? And South Africa's tax system is under immense pressure. While just 1.6 million individuals shoulder the bulk of personal income tax, an estimated 100,000 millionaires rather, are managing to evade their tax obligations entirely. Now, this widespread non-compliance not only strains government revenue, but it also deepens the financial burden on law-abiding taxpayers. We just saw recently, last week, when the Finance Minister, Enoch Godongwana, announced in the budget that SARS will get 7.5 billion rand. That allocation to SARS is really to enhance tax compliance and enforcement. It will go towards, improving technology and really getting them to pull in this tax that's missing. There's about 60 billion rand that's being lost in unpaid excise duties. And in terms of taxpayers, 800 billion rand is sitting in unpaid taxes. These are significant numbers. You're looking at 86 billion rand being lost because of illicit trade flows. And then you also have losses coming through from VAT, from VAT. 195 billion rand was the last figure that was bandied around. These are very significant numbers. So how then do we fix the situation here? Jashwin Baijoo, Associate Director and Head of Strategic Engagement and Compliance at Tax Consulting SA, joins me now to give us some insights as to how this will work. A very good evening to you, Jashwin.
Good evening, and thank you for having me on this tonight.
So we look at this investment, right? We look at, the SARS Commissioner, Edward Kisweta, has made clear that they need more money to strengthen their capacity so they can tackle this head on, because there's so much money there that we actually need right now, but it's not coming through. Will this investment be enough to tackle the issue?
So the first thing we need to be cognizant of is, in the budget speech, it speaks to allocation for SARS resourcing. But in saying resourcing, it's not just speaking to a recruitment drive, as we've seen SARS's high net worth individual unit go on previously, but it's also speaking to allocation of budget towards system development, modernization, and the development and implementation of automation through AI, which will then allow SARS to cast their net significantly wider. I mean, we've seen now that they've picked up 156,000 taxpayers who are not filing tax returns but showing significant economic activity. Now, that's not to say, there's necessarily 100,000 millionaires, but more a case of 100,000 individuals earning above $1 million per annum, not paying tax, and roughly about 30,000 individuals earning above that million but not registered for tax. So SARS's current eradication of non-compliance, it's almost like it's like a compliance program they've got. Last year we saw in the final stats that SARS had actually written off 36.5 billion rand in taxes through settlements and compromises. And though those are legal mechanisms taxpayers can use to actually settle their dues with SARS, where it's a case of it's kind of snowballed over a number of years, resulting in this 800 billion unrecovered tax deficit.
Well, Jashwin, what is the problem though? They've identified the people that are not paying. They're reaching settlements. But what was the problem in the first place? Why was there no compliance? They surely, if there's economic activity there, they understand that taxes need to be paid. What is the problem there? Why are we seeing this lack of compliance?
So SARS often speaks to voluntary compliance, and if we had to kind of look at it from the perspective of a taxpayer or of anyone, yes, taxes are rightfully due, but in the case of a country where you've got potholes all over the place, load shedding, overall poor service delivery, taxpayers may feel that they are being wronged by this extensive tax burden, because as you said, it's a very small number that carries the infrastructure of the country, and that's where you end up with taxpayers being non-compliant, on a voluntary basis, and the revenue collector simply not having the manpower or the systems in place for early year detection.
We also heard, when we were looking at the argument for the VAT hike, right? Firstly, they felt that compliance was dropping, and that would be a sure win in terms of collecting taxes because you can't avoid it. It's on everything. And they went that way. And they didn't want to, even though the minister, there were some points there that he was looking at a wealth tax, they stayed away from it because they felt that this could drive wealth out of the country.
Right.
Is that really, is this the case though, that would they actually leave? Would it make such a big difference?
So remember, one, there's no clear definition of a wealth tax per se, but two, we have types of taxes that specifically target the wealthy, because 9 out of 10 times it is the wealthy that make donations. It is the wealthy that acquire numerous properties and then have to sell them. So your capital gains tax, we have, your estate duty, your inheritance tax. It's typically the wealthy that engage in these kind of financial transactions. But also we must remember that, high wealth taxpayers, this is not something that's starting from a blank slate. There is a high wealth individual unit within SARS that started in about 2021. I think it was October, if I recall correctly. And that's simply because high wealth taxpayers naturally equate to high tax collections. But the thing is, no matter how much money you have, you cannot afford to be non-compliant, especially when faced with a revenue collector that's on a compliance crusade. So there have been smart, modern SARS, as we call it, developments, bolstering of manpower. And that's why I also say, it's not a case of just resourcing, because the specific unit, I think it was last year sometime, they published a list of vacancies ranging from senior audit specialist to senior specialist tax avoidance and reportable arrangements, etc. So SARS has been gearing up to go after these wealthy taxpayers, make sure they're tax compliant and obviously pay their dues. And to do so, they've created this specific unit to drive that focus on the wealthy, allocating, as an example, a high wealth taxpayer has an asset value of 50 million plus, right? So now that's your millionaire. And he gets or she gets a dedicated relationship manager at SARS that manages their more complex tax affairs, because often there are international sources of income and things like that to be considered. So that kind of focus on the wealthy, it's not something new. And the wealth tax, it's been on the cards as a discussion point for years and years and years. So that's kind of the stance on wealth tax for now.
So, it's a tough balance to strike between enforcement and maintaining investor confidence. Obviously, a lot of this, as you say, would go to hiring new staff, to empower them to move in on various individuals, but really just create that capacity for SARS.
Correct. And in creating that capacity, this explains your recruitment drives. It explains the recruitment drive from a couple of years ago where SARS just decided to hire 200 matriculants. But if you are talking more wealthy, more wealth tax, more high wealth, then you need specialists to hunt specialists, simply because the wealthy are well aware of SARS's attitude on non-compliance, but also to get to that level of wealth requires a degree of tax and financial planning. And for that purpose, they would have their own specialist tax attorneys, structuring specialist wealth advisors, etc. So SARS's automation is now aiming to reveal not just the taxpayer necessarily, but also in the case of aggressive tax planning or tax advisory, to extend that radar of non-compliance to the advisor themselves.
For your time this evening, Jashwin Baijoo, Associate Director and Head of Strategic Engagement and Compliance at Tax Consulting SA.